Hi there, welcome to Too Sharp with ET. I'm Nisha Poddar. Let's now get you the big news developments today that you must know about. So, Trump's tariff U-turn revs up the US markets to historic gains, and warnings as well as risks that global experts still point out after the pause. So the US stocks surged to one of their best days in history on a euphoric Wall Street Wednesday after President Donald Trump said that he would temporarily back off on most of his tariffs as investors had so desperately hoped that he would. So the US markets, they bounced back to what is now called a historic rally after Trump's 90-day tariff pause. It's a massive relief rally that the markets have seen. S&P 500 jumped 9.5%, its third best day since 1940. Also, Dow Jones has gained nearly 3,000 points. Nasdaq soared over 12%. The market fell, remember earlier, but Trump's post really sparked a U-turn. It applies to all the countries, not China. Tariffs on Chinese imports hiked to 125%, and rally pulled the S&P 500 away from the bear market levels. 98% of S&P 500 stocks rallied, and travel stocks really led the charge. Now let's focus on why the bond markets matter too. The 10-year Treasury yields, they have been lifting now the pressure. The spike that was seen was worrying for the US and also spooked the investor sentiment, and there were signs of stress selling to cover the stock losses. Even with the rally, markets are still really below the last week's level post the Liberation Day tariff announcement. Let's now also talk about what the market and experts are saying. Is the worst over? Wall Street's reactions and warnings need to be kept on the radar. Ray Dalio says that the tariff shift is welcome, but risks remain. Praised Trump's pivot to negotiations over confrontation, but urged that US should cut the deficit to 3% of GDP and warned of structural debt imbalances. He also called for US-China deal, including China appreciating RMB and boosting domestic demand. He warned that the investors would rethink their portfolios amidst structural volatility. Now, Goldman Sachs says that the recession risk is cut, but only slightly. Initially, they had, raised the odds of recession to 65% before Trump's pause. It was a quick reversal, and so is the view back to previous non-recession forecasts. But Goldman Sachs says it still sees only 0.5% growth in 2025 and a 45% chance of recession. He also warns the pause is temporary and many tariffs remain intact, including sector-specific 25% hikes. JP Morgan says that the recession still likely maintains a 60% chance of recession, unchanged after the tariff pause. JP Morgan also cited fragile consumer sentiment, also rising credit risks, sticky inflation. Jamie Dimon says that I hear it from everybody that people are holding back spending. Tariffs amount to a $300 billion tax hike, and China's retaliation adds to the risks. Jamie Dimon sent out a calm but cautious warning and says that defaults and credit issues could rise if rates and inflation persist. In the shareholders' letter, he warned tariffs could really fracture global alliances. Also advocates stronger trade ties with India and Brazil instead of unilateral pressure. Lawrence Summers says that recession warning is preceded pause and says that tariffs could cost 2 million jobs and slash household income by over $5,000. He also warned of depression-like risk if tariffs mirror 1930 Smoot-Hawley levels, and also cautioned that markets are really reacting violently to even the smallest of tariff cues. He's predicted global financial distress if the escalation continues. So Trump's tariff pause sparked a euphoric rally, but the trade war is far from over. Wall Street welcomed the pause but remains wary of China-specific escalation and underlying economic damage. Analysts say that long-term uncertainty really persists. Recession risks haven't really disappeared, just delayed. Lots to watch out for, but keep these on your radar while taking your investment decisions. And if you like this video, please do like, share, and subscribe. With that, it's a wrap. Thanks so much.